and welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show for Friday, November 18th. Welcome. We have lots to cover. Of course, this is the show where we bring you where the action is in the broader markets. And while the broader markets were rather flat, there was quite a bit going on beneath the surface. For our agenda today, we are, of course, as always, going to take a look at the broader markets, drill down beyond that, uncover where the sector strength, as always, with an eye toward getting you in front of those areas, and then individual stocks so you can take advantage of that strength that's taking place. We're also going to take a look at the pullback that took place in a number of big movers. We're in this period where earnings season is still in play and other factors as well, so that we're seeing a fair number of names, certainly relative to historical precedents, that are having these big pops. And so we're going to take a look at the pullback, how you can potentially buy them on their pullback. Also taking a close look at two of the bigger retailers that reported, both Home Depot and Lowe's. Equally strong numbers, different response. I'm going to share with you how you can uncover which of those two names was poised to trade a bit higher. Also, small caps, they did pull back this week. However, there are some bright spots that remain. So we are going to go ahead and take a look at that as well. So from here, we are going to take a look at the daily chart of the S&P 500. As you can see, it was mostly flat for the week, up a little under 0.5%. However, your outside momentum indicators remain in positive territory. RSI trending upward above this net neutral 50. Likewise with your stochastics. So net, we are in a general period of consolidation. However, again, there were bright spots in the markets, and we're going to go ahead and take a look at that. Beyond the broader markets, we can see here with the 11 S&P 500 sectors, this is a 2-month daily price chart view, and I've gone ahead and added that RSI in descending order. We can go ahead and update that. Up here in the upper left quartile are going to be your stronger areas, and then down here, weaker areas in the markets. And up here in the forefront, technology, I always like to see that. Of course, that's where the growth resides, and certainly an area that I tend to favor with my MEM Edge report. So we can see tech stocks up here hitting another new high in price, up 2.4%. That's as compared to, again, the broader markets up about 0.5%. We will, in this next segment, take a look at where that strength is in technology. And from here, let's take a look at some of these other sectors. Consumer discretionary, it has been up here at the forefront. We did have a big week this week, as mentioned, relative to a number of retailers reporting their third quarter results. These companies are the last in this Q3 earnings season to report, and a number of names did come out, and mixed results, but generally very constructive, quite positive. So retailers looking quite good. And then from here, we want to, of course, pay attention to where that general weakness is. Financials were down almost 3%, and we did see 10-year treasury yield dropping a bit, but also a flattening of the yield curve. And this is not constructive, certainly for bank stocks. They attain their higher profit margins from a steeper yield curve. Also, we did see energy stocks falter quite a bit, breaking down below this 50-day simple moving average, your RSI now in negative territory, which at one point into this week was simply a period of consolidation, most definitely under distribution, big volume here. We did see Brent crude, it's still up there above 80, but there were other factors that, let's go ahead and move to this next area, and I'll go ahead and share that with you, because we want to take a look at the underlying industry groupings behind those sectors, really drill down a bit more. I've populated this 2-month daily price chart with a number of ETFs. We have semiconductors, biotechs, banks, and so on. Again, that RSI indicator in descending order. So let's take a look. Mentioned that technology up at that forefront in outperformance this past week, and all about semiconductors. I've been talking about this for some time. In light of the chip shortage, demand has been high. In fact, for this third quarter, the most recent third quarter, semiconductors have posted their highest percent increase in chip sales, with an anticipation for that demand to remain quite high as chip usage has really spread through just about every industry. From here, let's go ahead and take a look at some other areas that I did mention to you. So XLF is that financial ETF, down about 3%. But here we are with bank stocks. They did not get hit quite as hard, but definitely not in a confirmed uptrend by any means. We can then take a look at Brent crude oil. I talked about the price of oil dropping. There was and is news that Austria is closing their borders because of spreading of the Delta variant. That in turn brought out fears of closures elsewhere, and then hence reduced oil usage. So that is one of the trickle down reasons there. And then also we can take a look at semiconductor stocks, an area that I favor as well because of the high growth characteristics of many of these underlying software stocks. But the group was flat and actually down almost 1% for the week, despite Microsoft, a heavyweight that was up 2% for the week. So a lot of that is going to be earnings related. So from here, let's go ahead and take a look at some of these other areas that I mentioned that we would be covering. And first up is taking a look at stocks that have had these significant moves and are pulling back. So first up, I'm going to share with you an example of what you want to see after a gap up and what I would say a successful pullback. This is a smaller cap company. It's called Blink Charging in that EV space. So it's more for precedence and educational purposes. We can see it had this big gap up. The company did report their earnings, and the stock pulled back to this 10-day, that's this green line, simple moving average binding support. Your outside momentum indicators are constructive. We can see it's a little bit more volatile than your average certainly name this week that's pulled back. Let's take a look at a couple of other examples. We'll take a look at Etsy. This is another company that has had a very significant move. Take a look at this particular earlier this month. They did come out with very strong numbers, big volume characteristics. And in Etsy's case, the stock pulled back to this upward trending 21-day simple moving average. That's this purple line. And we can see historically that that is an area that Etsy does tend to pull back. And then from there, it resumed its very significant uptrend. From here, we can take a look at some of these really big movers on earnings. Qualcomm, big gap up. This is another occurrence that oftentimes will occur where after that gap up on big volume, the stock will consolidate, waiting for that 10-day simple moving average in essence to catch up, and then another subsequent big move up from there. So looking at a stock that has had a big move, I talked about this name last Friday. This is Unity Software. They are big in that metaverse space, came out with good numbers here. So the stock has had, as you can see, a rather significant move. But take a look. It's very similar to what I just outlined in the sense that following big double-digit moves, these stocks oftentimes will consolidate. We've seen this quite a bit where they form what are called these tight flag formations. And so we may see a couple more days of back and fill action, but this is very bullish if we continue in this upward trending phase, pointing to a potential another leg up. Let's take a look at a couple of big winners, and these, not all of these are going to be great looking because I want to share with you what to be on the lookout for names that did gap up but have not followed through. So first up here is Farfetch. FTCH is the ticker symbol. The company gapped up here on news that they are collaborating with another. This particular company is an online retail platform for luxury goods. The news came out earlier this month that they're collaborating with another company that also is in the same line. Investors liked it. It gapped up, but take a look. The stock found resistance at this downward trending 200-day simple moving average. So for my work, I would not be a buyer on that gap up. Secondarily, they did come out with earnings today and they missed on revenues and also forecasted lower. So the stock was down 14% on the day. But again, that gap up into resistance wouldn't have certainly not gotten me into that particular stock. Another big winner this week on earnings is Macy's. Take a look, this big gap up yesterday. The stock was up 21% on strong third quarter earnings. So from here, when we see this big gap up, that volume is very constructive. Oftentimes, it's very helpful to use historical precedents as your guide. So we can go back to their second quarter earnings release, strong numbers, gap up. The stock did trend higher for a little while before pulling back. One other item or tool that you can use is taking a look at an intraday chart following that gap up. So here's that big gap up yesterday. Pretty significant move, but the stock did give up 7%. We're looking at a 1 hour price chart. Your first sign is when the stock breaks below this either 5 or 13 simple moving average. We can see your MACD trending downward, both still in positive territory. Macy's is not out of the game yet, but certainly your near-term momentum has shifted to the downside. Let's take a look at just a couple more examples because certainly a lot more that we are going to be covering here today. So another name that I wanted to share with you that is a bit of a smaller cap name, but they did come out with strong numbers yesterday. This is BJ's Wholesale Club, similar to Costco Price Club. They also, BJ, not only had very strong numbers, but also their membership has increased as well. So we can see another, it was up 20% yesterday. So a 3% pullback is very orderly. So this is another example where you can go ahead and drill down if you are looking to potentially uncover a buy point. This 1 hour, I don't use it that often, but we're seeing so many of these gaps up. I'm finding it quite useful as an instructive way to see whether the upside momentum has shifted. We can go back to this gap up on November 12th and see when that upside dynamic shifts downward, just what that looks like. So we are seeing BJ pulling down below both of these shorter term moving averages. Pretty big volume that last hour into the close. So your outside momentum indicators are still positive, but the super near term direction does appear to still be to the downside. I want to see, make sure I'm not missing any names. Here is a stock that has been a big winner for MEM Edge subscribers. This is Boot Barn, came out with big numbers. We can see the nice volume characteristics. It did break out of a 1 week base on their earnings number and really was propelled into a nice uptrend. So today's pullback was really only 3%. Let's take a look at the weekly because that's another view that can be really quite helpful because the stock was still up 6% despite that 3% pullback. And we can see that the uptrend is very much in place. I like to use precedents to see that it can remain in that overbought position for some time. We're going to take a brief break here. I'm going to share with you other areas such as small caps, take a look at Home Depot and Lowe's, and lots more. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. First up, I am sharing a chart of Home Depot. And let's go ahead to that weekly. I want to get a better feel. Yep. So the stock was up 10% on the week, all about earnings. So what I'm going to do from here is go ahead, mark up this chart, give you an eye and for what to be on the lookout for when we see these nice gaps up into a base breakout. So from here, we can see that HD did break out of this flat base, this period of consolidation, nice volume characteristics. Your outside momentum indicators are positive, and the stock really just propelled itself higher. So from here, I wanted to share with you that they did report earnings that were ahead of estimates, very good numbers. Lowe's, which is a competitor, LOW, also came out with equally strong numbers, and the stock did not, it had a good move, not quite as explosive. Home Depot was up twice what Lowe's was for the week. We did experience this nice gap up base breakout similar to Home Depot, but I did want to share with you one way if you are looking at potentially, in this case, should it be Lowe's? Should it be Home Depot as a buy? I'm going to go ahead down into that intraday and just share with you one difference that can be really quite helpful. Again, both stocks had very significant moves. Of course, we want to get into that stock that could potentially move even higher and faster. So here's LOW, gap up on the numbers. We can see it spiked up to this 255, but then pulled back. So your first clue here as it relates to Lowe's that the dynamics were not quite as powerful is this MACD crossover on the 1 hour intraday price chart. And we can see also that your momentum on the RSI generally trended a little bit lower. Again, we're not down and out. Lowe's could easily trade higher from here with your outside momentum indicators in positive territory. This is more related to that super near term. From here, let's take a look at Home Depot on their gap up on this 1 hour intraday price chart. Definitely, hopefully you can see a different look as far as the outside momentum indicators. We can see that Home Depot remained above its shorter term moving averages, and then the MACD remained in positive territory. Now into the close today, we did get a little bit of a pullback here, indicating that this super near term uptrend may be in for a little bit of sideways action, but I did want to share that as it relates to potentially playing these gaps up after earnings if you are inclined. Another concept I wanted to share with you, because I am seeing this not as widespread, certainly as other periods, but worth noting that we are seeing some dynamics in the way of failed base breakouts. So this is an example, Shockwave, SWAV, nice momentum stock. It has been on the MEM Edge report. We've been able to take advantage of these upward moves here, but let's take a look. The stock did break out of a base prior to the release of their earnings, looking quite constructive. Numbers were mixed. It pulled back, found support at that 50-day. But when you see these base breakouts that fail, oftentimes they will do so very quickly. So what you want to be on the lookout for for a base breakout failure is if we see the stock here, in this case, big volume pulling back in line with your momentum indicators turning negative. That is confirmation that this base breakout has failed. So that was another sidebar item that I certainly did want to share with you. And then also the concept of not buying when stocks have these big breaks. So I'm going to take us back to a stock that reported several weeks ago, and this is Snap. And the company, you can see it had this big gap down. They reported they're all about social media ad sales. The numbers were not good, and they did not guide higher into next year. So subsequently, we did get this gap down. Some may view this as a buying opportunity, but not so, because when this occurs, and certainly when it occurs on earnings that are negative, definitely not paid to chase it, if you will. We can see this upside resistance that's occurring now at this 21-day simple moving average, which is trending lower and lower. We've had these shorter term moving averages below the longer term. That is a death cross with the 50-day now in a confirmed downtrend. One other name that we can take a quick look at just to really emphasize that concept, that when stocks get into a period where they have a life, if you will, below this 50-day simple moving average. And this is another concept I'll share with you while we're here as it relates to base breakout failures. When you are on the lookout for downtrend reversal, this is another area that will oftentimes, if it's not going to take off, it will falter quite quickly. You also, in this case, did not get the high volume that I like to see in downtrend reversals. Failed very quickly, high volume break below this 50-day. Now any kind of upside potential is being met with resistance at this 50-day. So as long as that 50-day trends lower, your area of potential upside, upside resistance is going to be at lower and lower levels. So from here, I did want to share with you some of these smaller cap stocks that are really on the move. But however, very quickly before we get into that, there was one downtrend reversal that caught my eye today. Still very early. It just occurred in today's price action. This is Gilead, G-I-L-D, of course, a large biotech company. So here we are with the stock breaking back above that 50-day simple moving average. Now from here, you are going to want to uncover why. Was it earnings? Was it news? In this case, it was news related. They did submit today for FDA approval of their antiviral hepatitis drug, has analysts very excited, if you will. We can see a nice uptick in the volume on this downtrend reversal. So your RSI turned positive in line with that MACD. Now from here, you are going to want to see a continuation rally and a continuation of those high volume characteristics to indicate that investor interest is still in play. And then, of course, I shared with you what to be on the lookout for as a turnaround failure. So keep this one. I have it on my watch list. Certainly, I want biotechs to come back into the market because it indicates a risk on atmosphere. So from here, we can go ahead and take a look at some of these smaller cap names that are picking up. First up is LAC. This is a lithium company. So this is a stock that had this nice base breakout here in October, which in turn propelled the stock into an uptrend. So I did touch base upon that concept. When you see these movers, these stocks, small or otherwise, that get into these uptrends, in this case, August into September, how you can keep your eye out for a pullback, in this case to the 50-day. And then once the stock breaks back above its shorter term simple moving averages, it enters into a nice uptrend. So earlier this week, we did see another pullback, in this case to the 21-day, where the stock then has just today broken up above this 10-day on big volume. So looks very constructive here. Using those pullbacks in these bigger or faster moving names can really pay off if you missed that first leg up. Let's take a look at another company. Now, this is a really small one, but it crossed my radar. It is Universal Technical Institute. A little bit choppy here, but net, it did have this base breakout on this gap up. Up quite a bit today. The company does provide secondary, beyond secondary school automotive training for those wanting to be in the automobile, I'm trying to think, service industry. But they did announce that they are providing training in California for electric vehicle, clean vehicle, and that got the markets excited. We can see big volume, big move upside there. A couple of other names that this is going to be another kind of a pullback potential play. This is Signet Jewelers, SIG. The company has just found renewed interest, certainly during the pandemic. Apparently, the rate of engagement increased among couples as they were, I'm sure, together quite a bit more. So they a lot in the way of jewelry sales there. Also, the embracing of purchasing high-end diamond jewelry online. Certainly younger couples do not have a problem. There's a certification that's needed, of course, with each of these jewels, but we can see that SIG hit a new high here earlier this month and pulled back. So here's that pullback concept, in this case, to the 10-day simple moving average with a base breakout yesterday. So keep that on your radar. The company is a big grower. They just purchased a company called Diamonds Direct. They are expanding their business even more. Let's take a look at BLDR, a smaller cap construction company. And here we are with the stock that gapped up here on earnings. This is that concept that I spoke to, where the stock oftentimes will consolidate until that 10-day simple moving average catches up, and then another base breakout this week, looking quite interesting. And from here, we can just a couple of other names. One that you may be very familiar with is Overstock. They came out with strong numbers here. Thrust the company into, or the stock into, a nice uptrend. That pullback now poised for a nice base breakout. They came in with numbers that were 20% year above estimates. So Overstock back in play as far as similar to Home Depot. There was anticipation that the creating a nicer home was behind us, but not so. We're seeing a lot in the way of companies that are continuing to see sales as people put more money into their homes. Here's Eagle Materials, EXP. This is a basic, actually, I'm trying to think, they are in the cement space, I believe, but another building related stock had this nice base breakout, pull back to that 10-day simple moving average. Keep an eye on that MACD because we don't want that to trend lower. And then I believe I might have another minute here, but what I did want to do is share with you the fact that a lot of these mega cap FANG related stocks are in an uptrend and are looking quite constructive. I'm going to, and also Tesla had a great week. That was a top performer, up about 10% for the week. And also many of the other, it's a great looking chart, Apple, Amazon, Microsoft, all outperforming the broader markets. I'm going to leave it at that. Everyone have a great weekend. Please take a minute, trial my MEM Edge report. It comes out twice a week, and alert reports are offered as well. I sent out a special report last week, and there is a special offer. You can take advantage of that. I'm going to get much more into what to anticipate going forward into the end of the year. So you'll have immediate access with that link below. I'll see everybody next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.